All right, let's dive right in. The trade talks happening between India and the United States, they're filled with huge promises. But you know what? They also come with some even bigger threats. So if we look past the headlines, what's really on the line for India's economy? We're going to break down all of it, the risks, the potential rewards, and the really tough choices that have to be made.
Now, just let that sink in for a second. This isn't some far-off fantasy scenario, it's the very real possibility that's hanging over these negotiations. If things go south, a sudden breakdown could trigger a massive economic shock. Understanding just how high the stakes are is the key to seeing why these talks matter so much.
So, what are the actual issues driving this whole debate? What's really being argued over behind closed doors? Let's get into the specifics, the real numbers, and the exact points of disagreement that are on the table right now.
Okay, look at this number, $500 billion. That alone just shows you the incredible scale of what we're talking about here. The goal is to grow the trade between the two countries to $500 billion by 2030. So this is about way more than just dodging a few tariffs. It's about trying to unlock a truly massive economic opportunity.
And here is where things get tricky. This is where the friction really is. You've got the US wanting India to lower taxes on things like auto parts and steel, but then on the other side, India is understandably very protective of its farming sector and is also pushing hard for its own goods to get better access to American markets. These are the battlegrounds where some kind of compromise has to be found. Okay, so let's start with the good news. What's the best case scenario? If India plays its cards right and navigates these talks successfully, what's the grand prize? Well, the potential gains are absolutely huge, and they would create a positive ripple effect across the entire economy. A good deal would be a game changer, no question. It means more Indian products on U.S. shelves, which then makes global investors feel more confident and brings more foreign money into the country. But, it's also a big strategic move. A deeper alliance with the U.S. helps India spread its risk, relying less on other nations like China for its supply chains. And this is where it gets real for everyday people. We're talking about major industries that employ millions. For sectors like textiles, gems, and electronics, a good deal isn't just some number on a report. It's a direct line to more jobs, more growth, and a much stronger position in the global market. But of course, for every amazing reward, there's a serious risk. So now we have to ask, what happens if the talks just completely fall apart? Or what if India gets pushed into a corner and has to accept a bad deal? The potential pain could be just as big as the potential gains. This isn't just speculation. It's a stark warning coming from a top government official. A tariff shock, like the U.S. suddenly slapping on heavy duties, isn't just a minor bump in the road. It's a direct hit to the country's economic growth. And trust me, 0.5% of a country's GDP is a massive number. We're talking billions of dollars in lost economic activity. Yeah, that's a direct, quantifiable hit. A very clear risk that policymakers have to think about very carefully. And what's worse is who it hurts the most. And here's the crucial part. This damage wouldn't be spread out evenly. It would slam the sectors that rely on a lot of workers, industries like textiles, gems, and leather. The fallout could mean job losses on a huge scale, completely disrupting the lives of millions of people and their families. Do you notice the pattern here? The very same industries that have the most to gain from a good deal are the exact same ones that are most vulnerable if things go wrong. It really makes this negotiation a true double-edged sword for some of India's most critical export industries. And it's not just about the trade of physical goods. There's a major financial risk here too. All this uncertainty, it makes investors really nervous, and that leads to something called capital volatility. Basically, money can suddenly start flowing out of the country, which can cause the stock market to drop and the value of the rupee to swing wildly. It's a perfect recipe for financial instability. So, with the stakes this high, what's the game plan? How does India navigate this? Let's take a look at the strategic playbook for handling these talks and trying to find the best possible outcome. So, India's playbook is pretty sophisticated. It's got both defensive and offensive strategies. On the defensive side, it's about not putting all your eggs in the US basket, right? So you diversify, you look to markets in Africa, the EU, Southeast Asia. You also have to manage financial risks to keep the currency stable and support your own exporters with things like credit lines to cushion any blows. Then you've got the offense. The strategy here is to move up the value chain, so shifting from selling basic goods to more advanced, higher value products. And through it all, you have to negotiate smartly, protecting your key sectors while also keeping investors confident. And at the end of the day, it all boils down to this fundamental choice. Do India's negotiators go for it? Do they play aggressively and make big concessions to try and secure that massive $500 billion prize, even if it might hurt some local industries? Or do they play it safe, protect their own interests at all costs, but risk losing out on what could be a truly transformative deal? There's no easy answer here, and the path India chooses is going to shape its economy for many, many years to come.